Hello everyone, welcome back to another video. I'm so happy to be here for you guys, and thank you for watching the videos and showing so much love on the previous ones. Today we'll be talking about the crypto markets again and discuss all the fear that's going on and how people are losing a lot of money. Some people are making a lot of money, but the majority of the people are losing money, and we're going to be talking about that and clearing up some of the confusion and myths surrounding the crypto market currently. So when we look at the market, some are saying that this is a dead cat bounce, some are saying that this is consolidation before another leg up, some are saying that this is the end of all the crypto markets and that all the cryptos are going to go to zero. Here at TTI, we don't feed you lies and myths and try to predict the future. We teach you how to get through this using proper technical analysis and keeping your emotions in check whenever trading or investing in a stock or a currency. And it doesn't take a very experienced and very knowledgeable investor to even take a look at the crypto markets and see that there is a significant drop and that crypto did take a massive hit in the markets. And I do suggest staying till the end of this video to see exactly what our team and myself are doing during this crypto crash. So if you would like to know what that is, stay tuned till the end. So if we're looking across the entire market, we can see on average that the cryptocurrencies are down about 40 to 50%, with Ethereum being down over 50% and Bitcoin being down about 40% from all-time highs. Some of the fan favorites and very hype-ish coins out there, such as Doge and Shiba, and some of those coins are even down like 3 to 4 times from their original high, down about 80-90%, which is crazy. One thing to keep in mind is that these are all just price points at the time of making this video. Whenever you guys are watching it, it might be slightly off or it might be very different, but this is just what we're seeing in the market currently. And it's also a good practice to keep in the back of your mind that if a stock or if a company or a cryptocurrency can go up thousands and millions of percent, they can also come down that same amount. Along with explaining what I'm doing, I just wanted to go over a few things to keep in mind when trading or investing in anything. And first, I want to discuss how important it is to have a trading plan when it comes to trading anything for that matter. When we're trading, this means holding a security over a short period of time, let's say a few days, weeks, or even months, and that's considered a short-term trade. And we want to make sure that we know exactly why we're entering that trade and what we're doing and what our plan is. Whether your strategy uses Fibonacci retracements, using moving averages, or just using support and resistance like my own, have a plan with a defined stop loss and profit-taking levels to ensure maximum success with minimal downside. Just for y'all to keep in mind, blindly buying the dip is not considered a trading plan, and that is my humble opinion. Speaking of opinions, my opinion does not hold that much value as I'm not a financial advisor, but these are just some of the things that I've learned and picked up over the years, and I'm sharing with you guys as an educational resource. So please just keep in mind that I am not a registered financial advisor, and take everything I say with a grain of salt. Okay, moving on. This brings me to my next point, which is conviction. And this is the ultimate reason why you would enter a stock, trade, investment, or even crypto play. And this can be derived from either technical analysis or fundamental analysis, both of which I talk about extensively on this YouTube channel. Let's take example Bitcoin. Fundamentally, they serve as digital gold, and Ethereum provides smart programmable contracts that provide much utility when it comes to transactions online and making them more efficient. Most portfolio picks for long-term investing should be picks that have utility and solve real-world problems, which is a quality and strategy that a lot of new investors lack. They'll be investing in stocks like GameStop, AMC, just based on pure hype, and they'll buy at very extreme price points and end up getting burned in the end because these stocks don't have too much utility that matches their price point. Conviction in the cryptocurrency that you are trading or holding long term serves a purpose, and that purpose is to have you be able to hold on to that even when it goes against you in the short term or even the long term. If you have no idea why you invested into a particular security or crypto, it's pretty fun. It's basically like gambling. You'll be making money and you're just like, wow, I picked a cryptocurrency because everybody's talking about it, now I made some money. That's amazing. But when it goes against you, you're going to panic. And that's where fear comes into the game, because you're realizing, I don't know why I'm holding on to this. This is just making me lose money. I don't know why I entered in the first place. It was probably just a friend who told me about it. So having that conviction, having that reason why you entered a stock or cryptocurrency will allow you to hold it even when it goes against you during the short term due to stuff that you can't control. A wise investor once said, scared money don't make money. And I do stand by that statement as well. And just to sum it up, a somewhat wise investor also said that conviction in a security is the solution to the fear when that security goes against you. And that's something that you should hold to heart whenever it is trading, because this fear and conviction can also come in terms of your fundamental and technical analysis. Let's say you're investing into a stock just idly and you're taking it as a trade. If it goes against you, but you have a certain technical pattern and certain stop losses and profit taking levels, it'll be much easier for you to make that trade, even when it goes against you slightly in the short term. This is why so many traders will lose money on trades, just because their fundamental analysis or technical analysis isn't strong enough for them to hold on to that particular trade when it goes against them in the short term. And then once they sell, that stock will automatically take off. And that's just it just comes down to the psychology of traders and investors when they're investing their monies, because a lot of people will follow similar thinking patterns when it comes to investing and trading. Psychology and emotions are a huge part of trading and investing, and if you're finding that you're one of those people that just panic sell based on fear sometimes, maybe consider either doing more research if you feel like you are lacking in the research behind a stock or crypto, which is lowering your conviction, or find out whether you just need to trust your gut and you have done the research and you just need to refresh your mind knowing that you did make the right choice investing in the currencies and securities that you did. Just keeping that in mind, that emotions and psychology are huge, because everybody else is trading with those same emotions and psychology, looking at the same patterns at the same time as you. So don't fault yourself for it and just learn from it. The last thing I want to talk about is very simple, and this is just doing research on the currency, stock, or cryptocurrency that you are trading. Do as much research about a company that you can, and this will serve you dividends in both investing and trading. An investing example is like, let's say you know that a company gives you future guidance during an earnings call, such as Apple, and they give you the guidance that they'll be coming out with the car in 2024. This can help you get a leg up in investing early on, so that whenever that does happen later down the line, when it's more priced in over the years, you reaped a lot of those benefits. Another trading example is, let's say you're doing some digging on Tesla and they're supposed to announce an AI enhancement on a certain date. You can actually get into that trade a little bit earlier and sell before the news, after a lot of volatility and run up has taken place to that event, especially with options, because the IV will go up leading up to the announcement, and this will drive the option price up, allowing you to collect premium on the option that you bought earlier. And this just allows you to take a nice gain on that option that you traded. So on to the question that you guys have all been waiting for. What am I doing during this crypto crash? And I continue to buy into the cryptos that I have the highest conviction in, I've done most research on, and have provided guidance for the future. Projects such as Bitcoin, Ethereum, VeChain. I actually made a video a little bit before going over some of the deeper details into why I exactly invested into Bitcoin and Ethereum and VeChain, and I'll link that above. Another thing to keep in mind when investing is to only invest what you're willing to lose. If you are investing too much and over leveraging your household income to the point where you are getting tight on bills, I would say if I were in that situation, I would sell off some of my crypto, some of my investments, just to provide wherever needed. I just wanted to make a quick clarification and clear up some confusion. I'm not against anybody who makes money from Doge or SafeMoon or Shiba coin, whatever it is, whatever meme coin. I'm rather against people who gamble away their money. Don't get me wrong, if you set Fibonacci levels, support and resistance with stop losses and profit taking levels, if you made money from Doge and SafeMoon, congrats to you, because you earned it. I'm happy when people make money, not hating that. I'm just hating when people try to gamble on the stock market and lose everything, or even make money because you don't even know why you earned that money. It just fell into your pocket. If you blindly bought in because your friend Jim told you to, that is gambling. And same goes for cryptos like Bitcoin and Ethereum. If you just blindly buy into them because I'm telling you to, or because I do it, then I don't respect that. Keeping that in mind, make sure you think twice before investing. Notice how I didn't say trading. in securities and investments that you want to hold long term, because the visions of those companies will be very, very important when it comes to the long-term 5-year, 10-year outlook on a company. Versus when you're trading, you're just making you're trading short-term movements on a stock due to either a catalyst or a technical pattern that you see on the charts. I just wanted to also address one of the questions that some of you guys have been frequently asking on our other platforms, which was, where do I do technical analysis, or where do I do charting for some of these cryptocurrencies? Because Thinkorswim is amazing for charting on stocks, different companies like Apple and whatnot, but they don't really have the resources necessary to analyze cryptos fully. And I personally use TradingView, the free version, of course, and it is more than enough, and it provides all the provides all the technical analysis and charting features, pattern recognition that I would need. It's also very easy to set up trading bots and whatnot to help monitor your patterns on TradingView. So that's why I personally use them. A lot of the people in the TTI family also use TradingView, as they are free and they provide the most service out there that you can get for free in terms of analysis, technical analysis when it comes to cryptocurrencies. Do drop a like if you got any value from this video. Your support's amazing. It's motivating to make more of these videos for y'all. And if you have any questions, please leave them down below. And without further ado, I'll see you guys in the next one.